Hey everyone, Cotton Candy TA here. Welcome to Beginner's Course Part 9, Level Adaptation. Alright, if you're enjoying the content so far and haven't subscribed yet, go ahead and do so. Like the channel, spread the good word. If you want to support what I do, you can donate, and the details are in the video description below. And if you haven't checked out the Twitter TradingView account, feel free to do so. I post up my daily trades there and the content release and kind of my day-to-day interactions. Alright, without further ado, let's get right into it. Okay. Level adaptation. Now, before we get into this, I want to start by saying that this is going to be one of the most important lessons within the beginners and advanced course. This is going to be one of your golden keys, this lesson, to understanding how everything works together. And it's really going to tie a lot of these concepts together and kind of put weight to everything we've learned. So this might be a bit of a lengthy lesson, but it is also one of the most important, like I said. So, level adaptation. What is level adaptation? All right, level adaptation is the idea that levels start to take form to the theories that we talk about. So we talk about time frames, we talk about patterns, wedges, all these different things like that. And level adaptation is putting weight to the theories that we've learned. So, we identify levels in terms of support resistance, in terms of wedges, trend lines, this and that, but we need to adapt these other theories to them. We need to start adding a baseline, right? We created our baseline, and we need to add to that with all these other theories. So we attach the two, right? We take all these theories that we learned throughout the course and the ones that we've learned so far, and then in the future, when we are further adapting our levels, and we attach them to that principle of levels. So we kind of take the context and we apply those confines or those bounds to levels. Okay, so that's what level adaptation is. It's kind of the constant evolution of levels and how they further evolve over time. All right, level segregation and levels 2.0, the refinement of dailies and lower. Okay. So there's a very specific way that I taught levels to begin with, and the thing that we did, and let's switch over to the chart here, right? The thing that we did is we defined our levels from kind of this top-down idea to start, right? We defined monthly levels first because of their strength, okay? We defined weekly levels after that because of their strength relative to monthly and daily levels. And okay, so before we go any further into this, if you haven't watched the previous video, stop this right now and watch it first, because you will not follow along with this video. This is building off of video 8, which was time frames. This is furthering time frames and a building off those theories, and actually the whole entire series, course 1 through 8. You'll need to watch them all and understand them in great detail to start applying this concept in this lesson. Because this lesson is so complex and it is tying together so many of these different things that we have learned about. If there's something you're not getting, go back, study it, understand it fully, and then come to this. This lesson right now is going to be very dense and context rich. It is going to be a very important lesson. Like I've said a few times now, it's going to be one of the most important lessons that there is in the most important lesson in the beginner's course, and one of the most important throughout the entire course. It's one of the golden keys to this entire thing, right? And there's going to be 5 or 6 of those types of videos, but this is one of them. So this is kind of a milestone video for people, and it's gonna give clarity to a lot of the things that we've discussed. All right, so I've taught how to identify and create levels in a very specific manner to get to this point. Now we are going to refine those levels, right? We are going to take this and do level refinement and further build off what we know. So let's just quickly review what we talked about before. Okay, monthly levels. We've got the way we've learned it is the low and the high of the candles, right? So you have your swing low candles, and you're going to have both sides of that, right? So you have the swing low candle, and you're going to have the low of that candle and the high. In this case, we didn't put the high on, and you can go back and watch the previous video to find out why. And then we have the swing high of the high candle and the swing low of that high candle. Then we have our swing low candle down. So we have the swing low of that low candle and the swing high, which is this level right here. So this doesn't actually have its own second level. It's just a testing of this. So this actually only has one level. And then as we further traverse down this, we have this swing low monthly candle right here, right? We have the swing low of that low candle and the swing high. Okay, then we did the same thing for weeklies. We further dove into this and we identified that on weekly levels, right? So we had the swing low on the weekly, which was here, which was a monthly level. So we identified just the top side of that as a weekly level. Okay, then we had the swing high of the move, and on the weekly, that would have been the swing low. But on the monthly, the swing low was actually back here. Now, again, if you're not following this, go back to the previous video, watch how we identified the swing high and lows, and you'll be able to follow it, no problem. You'll see exactly how and why as I step through it. But this is just to recap because this is going to be very important going forward through this lesson. Okay, so then after this swing high, we have the swing low here. So we have the bottom side and the top side, and so forth. So you guys can see how these levels were identified, and you can follow this, so forth and so forth. So then we left our Monero chart, and we're going to be working with the same chart that we had at the time frames chart, with the exclusion that I removed the daily levels, because the daily levels are what we are going to refine, and there is a segregation that happens between levels. The way I taught levels is that you, and again, this was a very specific way I taught this because I wanted you guys to see how to identify the top and bottoms of swing lows and swing highs. Okay, so it was very important that we started by learning the basic part of this, which is what we just said, the swing lows and highs of both sides of the up and down moves, right? And then we needed to see how to identify those levels on a daily as well. Okay, so like I said, I taught it in a very specific way to open people's eyes to start seeing where these levels are without further refining them too quickly, because if you can't understand the basics of the moves, you won't grasp the further concepts, and this is going to be the refinement of those levels. Now, what does it mean when there's level segregation? Just like any other type of segregation, there's a split, right? There's two sides to this thing. There's the monthly and weekly levels, and then there's the daily and under. Okay, so that's the segregation right there, is monthly and weekly, and daily and under. Okay, so that's the segregation of levels. Now, what does that mean? You guys can see right here on our monthly and weekly chart, we have created the levels and identified this, as we just said, as we just walked through. Okay, now if we swap over to the daily, and you notice I have one daily line starting here. Like I said, I removed everything else from our Monero chart that we worked on yesterday, because we're going to be changing that up a bit. I have one level to identify where this is going to start, right? Because we talked about this yesterday, or sorry, the last video, I should say, not yesterday. It was yesterday for me, but the last video. In the last video, we talked about this, right? Where we went through all this chain of events, and we identified the tops and bottoms of these levels. We are no longer going to be doing that with daily levels. There is a different way to do this with daily and under, and that's the way, and not the way, but that is the segregation between levels. So we are going to walk through this move and how we are identifying daily levels now. So this is a refinement of our levels. If we kind of switch back to this here and we look at this, so that's the level segregation, and this is going to be levels 2.0, the refinement of the dailies and lowers, right? So this is, again, just to be very clear, monthly and weekly have one set of rules, and dailies and less. So everything from the 15-minute to the daily candles have a different set of rules, okay? So let's go back to our chart. Okay, so the way we identify daily levels is they do not have a swing high and a swing low on both sides of the move. So we are going to walk through this, okay? And we are going to start right here. Okay, swing high right here. We already know this is a monthly level, so we're starting here. We come down, we already know this is a level, so we're not going to mark that as anything. The swing high of the level is going to be our first daily level that we mark. And that's obvious, it gets respected right there. Now, as we go down through this, right, we're going to explain why we're doing what we're doing. So just follow along for now. We go down, and the next swing low is a level. Okay. Yeah, magnet tool is on. So the next swing low is a level. Okay. So there we have our first level. And then the swing high would have been here, and it actually just touched the level. So this is kind of a zone that gets created, right? The swing high to the swing low. If we were doing it the traditional way, we would have marked the top side of this candle and we would have marked the bottom side of this candle. This does not work. Oops. Old trading view. This does not work on daily levels because you start to have too many levels all over your charts and all over your graph. This is only prevalent and relevant to dailies and weekly levels because they are such strong levels, because as we discussed in time frame and kind of level strength, they are such strong levels that both sides of those have that up and bottom, that top and bottom side. And the reason being is because when you're on a daily or a weekly level, right? Just go back to the weekly here for a second so we can talk about why. Okay, let's just go take a look at one. Okay, so this one right here, it's just whatever's in the middle of my screen. So the top side of this is 28,471 sats, and the bottom side of this is 23,000. What is that? Oh, I guess I can just move the mouse and look right here. Is 24. So we got 24,000 on the bottom side of this candle, and on the top side we have 28,500. So we have a 4,500 sat difference. That's 20% difference. You know, if you start breaking down these daily candles in that manner, well, let's go take a look. We know the weekly is 20% because that's kind of the range that weeklies and monthlies live in, and monthlies are going to be 50% sometimes, or 200%, or whatever, right? So let's go back to this, and if we were to break this down, let's get this nice and centered on our screen. If we were to break this down, right, we have the swing top, the swing high here, right, and we have the swing high there, right, and then we have this, and it would have been this right here. What is that? 300 sats. That's not enough, and that's why we are not using what is that, 1.5%? Yeah, that's 1.5%, 300 sats. That's why we are not using the tops and bottoms of all these daily candles. Instead, we are creating zones, okay? So this right here is a zone. This is the zone that this lives in. It's the swing high and the swing low, right? And that's what we are marking, and we are going to step through this, right? Because there's a few rules that we need to learn about and discuss, okay? So we start here, we mark the swing high. We then mark the swing low. We would have marked this swing high if it wicked past this level. That is the rule. When it wicks past this level that was created in that zone, it is being marked on the next as a new swing high, right? You kind of like you're gaining that high. So, and that's another concept we'll go over in advanced lessons. It's called gaining the high, right? So this is not going to be a level, obviously, because it just touched our previous level. It is only going to be a level if that wicked up, right? And then it will be another level. So as we come down, the next swing low is here. Let's toss our magnet tool back on, good old magnet tool. Okay, and our swing high on this move is right here. Just expand this out a bit so we can start to see the chart as this evolves through. Right. So our swing high, we have a low here. Our swing high is, oh, magnet tool is being a little funny, right there. Is that the swing high? Let me double check. Swing low, we have another, no, that's not, because we would have had to break this level up here. We would have had to actually wick this, whoops. We would have had to actually wick that level to make a swing high level. So actually this is the zone that's created that this lives in, okay? We have a swing low here. Now this is important because I want to put the replayer tool on here for this. If we were to look at this, right, and we were to step through this during the moment, we have, that's where the swing low is created. That is not wicking this up here, okay? So let's step through this. That's a new swing low, okay? So now let's do this. We're gonna mark out this swing low right here. But look at this. This now wicks this level. So that is actually creating another level because it follows the rule. Remember when we said we are living in that zone, that square that's created, that same zone is created here, right? This same zone is living right here. So when we wick past this, we are creating a new level. So that is where you can see the swing low gets created here, and it actually wicks past this. Even though it's a tiny level, you know, it's only 300 sats, this is a swing low and a new level and a wick pass. So that is the rule, and that is how it is used. When you wick past your zone that you're in, right? Just like we had a zone here, just like we had a zone here, you are creating a new high because you are it's almost like you're gaining the high. And that's another concept for a future lesson. We want to exit this right now, yes, because I wanted to just kind of go over that and show you guys that. And immediately we can see that this swing low is being respected here, here, all through here in this zone right now where we are. This swing low is being respected as it comes down, right, as it tries to push back up over it. This swing high is being respected in here, right here, right here, right here. So this is how you properly identify levels. And it's very important, that segregation between daily and less. So 15 to daily, right? That 15 to daily time frame that we identified. And then weekly and monthly, because of the strength of the levels, right? So this is going to help start clean up your guys' charts a lot, right? And like I said, it was done like this purposefully because it would be too much to expect people who don't understand levels at all to go and start marking out every single level. This stuff is, this dish is best served over time. You cannot, wait, what's the saying? This dish is best served cold. So that's not the saying at all, but you guys get what I mean. This 5-course meal is served over the appetizer, I don't know, the salad, I guess it would be, whatever, it doesn't matter. I'm gonna move on because that was a terrible joke. Okay, so there's also going to be quite a few more lessons on levels as well. This is not the final lesson on level. There's probably 4 more. I can count 3 at least, all with theories just as important, if not more important than this. So we are going to constantly adapt and add this idea of adaptation to our levels as we are going over the more advanced nuances and how these work at an advanced level. So let's continue this move. I don't want to get too caught up in rambling because this is going to be a very long video as it is because it is such an important set of concepts. So we create a new swing low there. We come up, we break that right here. We create that new high. This is coming down, right? And the tool's being funny. I don't know what's going on with TradingView. It's being very funny. Okay, we make a new swing low right here. This is another level, right? This is a swing low as we are moving up after it, right? We are moving over it. See, you have a swing low there and you actually move up. So there's 1, 2, 3 candles on the daily that are higher than that. So that is a swing low, okay? This right here, right? This right here is not a level. This is not a level because it's not a swing high. Okay, you see how this is a swing high? You see how this attempts to be a swing high? This is not a level. Where did it go? Where are we? Right here. This is not a swing high. This is just a continuation of this downtrend. So this would have been a level right there, but that was either marking a monthly level that might have marked. I don't recall if this marked the monthly level. It looks like it probably did, but regardless, that's the level right there. We come up, we test this level. It's not a swing low. This is too close in proximity to this level right here. This is not a swing low level right here. Oh wait, yes it is. 1573, 1559. This is a swing low level. My mistake. We actually have an attempt at a swing high here. So this is a swing low. This is a level here. This is a daily level. Yep. So swing low, we come up, we come down. We have another swing low right here. This is a level right here. We wick past this. This is a level. You see how we are living in this zone right here between these daily levels, right? Right here, that is a level because we are wicking past, right? We create this and we regain that level right there. So this level back here that established our swing low, we are passing that right here, making that a level, okay? And you can see on the chart that it is actually a level. Right, so understanding these zones and how this starts to break out, this is how you guys have to now adjust what you've learned and adapt the way that you guys are making levels. Okay, let's continue on. Okay, we got a swing low right here. And we got a swing high right here, and this would be another level as it wicks past this level, right? That's another daily level right there. You've got quite a bit of level congestion here, which is actually okay. It looks like level congestion here, but when you start breaking this down into a 15-minute chart, and we're going to do that later, it's not level congestion, right? And then you come up and all this here is our, well, okay, well, let's just step through it. Yeah, this is not, this looks like level congestion because we are looking at a range of 13,000 sats all the way up to 19,000. That's, what is that, 6,000 sats on 13,000. That's just a little bit under, was that like 45% or 46 or something like that, or 44? Oh, I guess I could just use my tool to see, right? We are looking at a range of, well, if we go to the very top, 60%, if we go here, 45%. So we are looking at a very large range. This looks like congestion, but as you break this down, this is actually not that congestion. It just, would appear to be so on this chart. So let's continue. We make a swing low level right here, right? So the level right here. We come up, up. This is a test of that level. We come up, right? We make swing low. We test that level. We come back up. So our levels are pretty defined now, and we don't really have any more levels being created because they were all kind of created back in this beginning of this downtrend right here, which is very common, and that's the way this works, right? You create levels in the downtrend on the way down, and you respect them on the way up, trying to break them. They are the targets, right? So, very common. There is one level in here as I'm looking at this. So we have here swing low here. That's on the monthly. That's not a level. We come up. This is a level right here. You see how this is the zone it's living in, right? This is a level right here. Okay, wait, let me double check that. Okay, we've got the swing low. Now this is where you have to kind of, okay, so this is the zone it's living in. Right here. Magnet tool. How I feel about my magnet tool. So this is the zone it's living in right here. It wicks past. This is not a level. This is not a level right here. It would have had to wick past this. It touches that, wicks past that. No, it is a level. My mistake. That is a level right there. Yep. As it wicks past the zone that it's in. And that's part of the process, is going and identifying where you are in these levels and what zone you are in. And this using these boxes in this tool will help you identify, because it's not always clear, right? Because you have so much going on, you have to start using kind of this box and identifying the zone that you're in. Now the zone would be between those two daily levels. Okay, so let's continue on. We come down, we come up, we come down, we come up. This is all respecting levels. And this is part of time framing, right? This is part of the process. Now, if we were to switch this over to the hourly chart, let's just take a look at something here, and ignore that for now. This was something I was doing today. We'll just delete that. So let's take a look at this and see how this looks with our levels. So now that we've identified kind of this level segregation, if you want to call it, and the way these levels are working between levels, let's take a look, right? And you can see, well, we'll just start anywhere, it doesn't matter. You can see, sure, we'll start here. You can see that your price is pretty much 100% respecting these levels, right? This level's respected here. Good old magnet tool. It's never going to end with this magnet tool, I swear to God. You can see the price is respected on this level. It comes up, it tests this level, comes back down, tests this, comes back up, tests the weekly. Comes back down and kind of sits in this zone here, comes up, tests this level here, breaks the weekly, comes back down, tests this here, tests that there, tests this weekly, tests this daily, right? So you guys can see that as you go through this, these levels are being pretty well respected 100% of the time, right? It's you can see it constantly test in this area here all the way through, and it lives in this kind of this short little box here that's created, and after that little short box, it lives in this short box, right? And it loses this level here. Not only does it lose this here, right, but it loses this here, so it goes down to the next level. So you can see how kind of clearing up these levels and making your chart less is more, right? You can see, and we're going to continue that principle in this video. You can see how the process of clearing up this chart and now taking away all the swing highs and lows, it's helping identify this a little clearer, right? That segregation of levels helps with this, okay? So that is how we adapt our levels to time frames, right? We are looking at, and that's the adaptation that we are doing here. We have taken the concept of time frames, right? What we talked about in the last video, we have taken that concept of time frames and we have adapted it into levels, right? So level adaptation with time frames says that we should have a segregation between monthly and weekly being in one sector, and then the next sector down, a segregation from that concept of time frames, that daily to 15-minute will live in a different set of rules, which is exactly what's happening here. So let's, I hate having all this stuff on my chart, so let's get rid of it for now. And we can swap to the 4-hour. And the same thing. We can see the 4-hour chart. It is fighting the same fight, doing the same battle with these levels, right? It is bouncing between this level here, going up, crossing this, right? Coming down to test this level, coming up to test this. And for anybody who doubts these levels, I really want you to look at where these tests are. And I'm going to put a green strike through the tests on the levels, right? Test right there, test right there, right? Test right there, test right there. Test right there, right? Test right there. Right here, right? Test right here, test right here, test right there, right? So you can see test right there, and then it lives in this kind of this congested zone in here, but still within that, tests all through there, test through there, test there, sits kind of on this line, test there, test there, test there, right? Sits on this line, test that, sits there, tests that, loses it, tests this, tries to regain this up here, loses not only this, but this as well, causing a huge move down to the next level. You notice something pretty interesting right here is we never identified a level in this zone right here, right? This whole idea of level congestion are the levels really congested, and how accurate is this? Well, let's look at this. When we lost this level right here, did we stop at any point in here at all? Right? Did we stop anywhere in there? No, we didn't, because we tested down on the next level. And then from there, we test down on this level, and then we test our monthly, and then we try to come back and test up a high here, right? And then we still live in this, right? Oh, whoops, we don't want to do that. Let's get our pen tool back here, right? So then, is this zone in here a level, and is this really a level right here? Well, let's look as we keep going forward. Is this a level? Yeah, it looks like it to me. Is this a level? Yep. Is this the level? Yep. Look at this. Bounce, bounce, and down. Test. Come up. Test. 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 Come up and over. Bounce. Test. Come up. Test. Come up. Test. Right? So that should be pretty glaringly obvious that these levels are real, and these levels are the exact way they are, and this is the science behind these levels, and it can be seen on the charts no matter what you do, right? You can see it on these charts, and you notice there's nothing in here, right? You want to see something else? You are testing this low right here. If you would have lost this low that started this up move, this is just a little tidbit for the advanced stuff. This is like a little nail biter or teaser, I don't know, whatever you want to call it. If you would have lost the low that started the move, you would have tested down here somewhere. You would have lost the low that sat on the monthly level. If you lost this low here, you would have tested down here. It would have been a pretty ferocious dump. A little teaser for a future lesson, just to keep you guys, your interest peaked. Not that it already wasn't, but just to kind of give you a little tidbit. Okay, let's move on. So that reduces a lot of this congestion with levels, okay? That's level segregation and the way it works, right? We've kind of talked it to death now. Moving on, time framing levels. Now, this is something that's really interesting. So that whole concept of congestion is very important, because as we go through this course, you are going to see that less is more. And as we look at these levels, we have to kind of look at them with a good clarity in mind to see what's happening. If we have too much going on, right? If we have too many of this, too many of that, too many levels, let's go to the weekly and see what this thing looks like on a weekly. Okay. I don't know I don't know what you could make of this in the weekly, because like, look at this is working perfect for a daily chart. This is working perfect for like a 4-hour chart. It's a 6-hour, a 12-hour chart, even a 15-minute chart, 1 hour, 2 hour, whatever time frame between daily and 15, even a 1-minute chart, right? Even a 30-second chart, like a tick chart. It's working fine because you can see the process of these levels being respected as we walked through this whole time. You can see that process being respected, but all of a sudden you switch over to a weekly and it's like, whoa, like, what the heck is going on? I can't see anything. What do I make of this? This is insanity. And then even worse, you go to the monthly and it's like, it just becomes this soup of levels, and it's impossible to see. So we now do something else, okay? Right? We are now going to time frame out our levels, right? This is something very specific, time framing levels, okay? So what we are going to do is we are going to time frame these levels. Okay? So what does that mean? I will show you what that means, and it's pretty cool. Okay. What we end up doing here is called time framing levels. We pick this level. Now this is exclusive to TradingView. I don't know how other softwares handle it. I don't know the command prompts or the sequence of events or however you get to these features on other sites or softwares or charts. But on this is for TradingView. This is how I know it. Right? If you double click this level, you can do this to any level that you do, any wedge, any trend, any level, right? If I was to double click this one, it gives me different parameters. If I double click this level, in the visibility, you have parameters and properties that you can change, right? So if I wanted to say these red levels, these daily levels, I don't want them to be visible on a weekly chart. I don't want them to be visible on a monthly chart. I just want them to be visible from 1 day, right, between 1 and 24 hours, right? So it's going to show me on the daily. It's going to show me 1 to 24 hours. I could even put this at 12 and it would still work the same, because a 12-hour chart is all I use, but we'll just leave it at 24 for this. And 1 minute to 59 minutes. So I want this visible on a 1 minute chart, on an hourly chart, and a daily chart. Okay. If I put this to 7, it would technically make it a weekly. So that's the way this works. And I'm going to hit OK. So now this top level, if we switch it over to the weekly, you notice that is gone. This is very important. That is gone. So let's go back to this. We ticked off the weekly, we ticked off the monthly. We're going to go to template and save as. And I save this already as daily level, but we will save it again. Sure, why not? We'll just call it the same thing, daily level, and it's already color coded red the way we like it for our daily levels and all that stuff, and we're going to overwrite that template. Sure. So now this is going to be a little tedious because we are going to have to go through every single one of these, and we are going to have to change that template on them to daily levels, right? So we go through them, we change this one, let's do this one. Fun, fun, fun. We do this one here, probably about halfway through now. We do this one here, and let's just quickly pop over and see how that's cleaning it up. Aha, you see, we are cleaning it up quick, right? This is house cleaning. This is how you guys are going to have to start setting your levels on a day-to-day basis, right? Every time you are charting, I want you to start building out these templates and use my daily levels as your first template, right? I want you guys to have these daily levels only visible on the days, hours, and minutes. Okay, these are not relevant for weekly and monthly charts. It is just a soup, like I said. Daily level here, and I think that's the last one. Maybe this one we didn't get. No, we didn't get this one. Okay, so let's see how that looks. Aha, look at that. We have a clean weekly chart. Ta-da, like magic. We now have a clean weekly chart where we can see what's actually happening on our weekly chart. We can see, look at this. Oh, magnet tool's not on, it's still being funny. What's going on? Okay, we can see, right? We touch down this level here. We break over this weekly, we come down, we touch this monthly, we are testing this weekly, right? Now we don't have this mass confusion going on in our charts. Now we can promptly switch between daily, monthly, and the monthly we want to keep the weekly levels on too, because in the monthly level the weeklies are respected, right? Now we can see what's actually going on in our charts. We don't have this overflow of levels and this congestion that always happens. And as we switch to the daily, those levels are back for us. And as we switch down to the 4 hour, those levels are still there, and the 15-minute, and so forth. So that is the cleaning up and the time framing of levels. Okay, now this is just support and resistance. The time framing of levels actually overflows into everything. So if you remember yesterday, well, I keep saying yesterday, not yesterday, last video. If you remember on the last video, we specifically set this wedge purple, right? Because this wedge, right, we identified this wedge first and the biggest time frame on the weekly. That was where it was visible. Okay, the same principle applies to wedges, and the same principle applies to all the trend lines that we create. The same principle applies to all the levels, wedges, trends, patterns, valleys, everything that's a level, which is all of the above that I just mentioned, this applies to. So an example of that would be if we were on a 15-minute chart, okay? And let's use yellow. We're going to use yellow for the 15-minute chart. Let's hit the auto button. That will scale us nicely right now. Okay, let's see what's going on with Monero here. What has happened? Let's make some trends. Okay, we have this trend here, swing low to the next swing low right here. That is a trend, and we are now going to use yellow, right? Okay, let's switch the color of this to yellow. Okay, now we only want this on the hours, weeks, and minutes. Okay, or sorry, we only want this on the hours and minutes. So 1 hour to 24 hours and those minutes. We don't need this on the daily. The 15 minutes not going to bleed over into the daily, so we don't want to see on our daily levels when we are looking at this. Let's just switch that back on, and you'll see why we don't want to see it, right? So we have one kind of trend right there. It looks like this here to that right there, right? Well, actually it would be the first kind of one, which is right there. Oh boy, it's being a little funny. We're just going to click it to that one. So these trends we can see, right? We've got this trend, bounces, 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 rejects off a level right here, rejects off the daily. So this is, if you were to go to this move, and this is a little bit off the beaten path, but this is, we'll walk through this for a second. Right, if you were in this move right here and you saw the swing low that started the up move here, and that's where you would have identified this right here is the first kind of swing low on the move up. That's not really a swing, well, it is a swing low, right? And then you would have just adjusted it a little bit to make it a little more clear there, and you would have seen it comes up, it's kind of riding this uptrend, tests right there, gonna reject 90% of the time because it's first touch. Tries again there as first test, doesn't quite make it. It's now getting kind of squeezed into this point where if it keeps moving sideways, it's going to move down, just like what we talked about before. So it actually has to break this level pretty ferociously to kind of continue riding this out, right? So you can see it really gets pushed into this corner here, tries to break, rejects, and right there kind of loses its trend, and it should move down pretty quick from here, which it does, right? So it moves down pretty quick, right? And actually breaks that level right there. So yeah, we don't need to go on any further other than to see that this was the trend right there. Now let's draw the next trend just for whatever, snakes and ladders, if you want to call it that, for lack of using a different term. So then we have kind of this other trend line here, and let's get out of the replayer now. Let's just catch this up. Yeah, that's fine, it doesn't matter. And look at that. As soon as it breaks, it starts to move sideways, and now it's kind of in this channel here. So if we were to switch over to the daily, oh right, we've got to turn it back on first, of course. If we were to switch over to the daily on this, and we were to flick that on, and we were to flick that on the daily, and we were to flick that on. Let's see what this shows us on the daily. Is this going to be congestion, or is this actually going to be something of relevance, right? Swap over to the daily. Let's clear this up a bit, and that doesn't show us anything. It's just congestion. It's just confusion, right? So we want to make sure that this time framing levels is on the appropriate spots, right? We don't want, when we go to our daily chart to see what's going on, we don't want to see 15-minute straight lines like that. It's awkward. Let's go to our hourly chart, see how that looks. The hourly chart, it makes sense on, okay? An hourly chart, this is going to make sense on, right? You can see the hourly chart is respecting it as well. So when you switch over to your hourly chart, you're going to have this visibility of what's happening. You're going to say, whoa, look at what's going on. I've got a level that's being tested right here, right? A level that's not quite being tested up here, which is a weekly level. I've got a downtrend on the hourly that kind of got support off this level and created an uptrend. This uptrend came and kind of squeezed between these two and failed, and now it's moving down. And I know now that I'm moving sideways out of this bleed, right, out of this downtrend, I'm moving sideways, I can establish my next move. So on the hourly, it's still relevant, right? What about the 4 hour? 4 hour, it's not relevant, right? So on a 15-minute move, what are we going to do? And this is how I do it. I take the days off and I adjust this to 3. Right, 3 hours. I don't want to go past 3 hours when I never use a 2 hour chart. I never use a 4 hour chart. Sorry, a 2 and a 3 hour chart. I very seldomly use a 2 hour chart. Sometimes I will look at it. It's more for just kind of jokes, but sometimes I will look at a 2 hour chart. But I'm using a 1 hour and a 4 hour chart. So I don't want this showing up past the 4 hour mark. I want this showing up only from 1 hour to 3 hours. And you can even just put this to 1 to 1, right? Just keep it simple. But you know, as long as it doesn't show up on the 4 hour, I don't care, right? That's all I care about. So you want it to show up from 1 to 59 minutes, 1 hour, which is 60 minutes to 3 hours. Okay, so now we're going to save this. We're going to call this 15-minute levels. 15. Oh, no, not exclamation mark 5. 15-min level, right? Okay, so we are going to save that. Now, when we switch over to the 4 hourly, it is still there. Why is it still there? What's going on? Oh, because I didn't apply the template. That's why, of course. 15-minute level. Okay. 15-minute level. Are you sure you want to delete? Wait, what did I do? No, I don't want to do that. Template. 15-minute level. Okay. That should be all 3. Oh, I forgot one. This one, I thought I did this one first as default. I guess not. Maybe I didn't apply it. Double check them all here so we don't do this again. 15, yeah, they're all on 15-minute level now. So now when I go over to my 4 level, I don't have that congestion. So this gives me kind of clarity to going through these charts fast and snappy, and I can chart these out on different time frames, because something that's very important that you guys have to know is bigger moves, right? Monthly moves are made up by weekly moves. And weekly moves are made up by daily moves, and daily moves are made up by hourly moves, and 12 hour and 4 hour and 1 hour and 15 minutes. So every time frame has an effect on its earlier time frames, and the earlier time frames have an effect on the later time frames. Of course, it's kind of common sense, but it's very important to know that all time frames affect each other, and you have to be charting these things on multiple time frames to understand what's going on, right? So that is trends and that is levels. Now, this also applies to wedges. Now, if you guys remembered, we made this wedge, right? This weekly wedge. We made this wedge purple for that specific reason yesterday, leading up into this, because we already wanted to have this defined. Now, the daily and the weekly and the monthly levels, those are always on all charts, because we need to know that if we are in this period of time, this is getting a little wonky. It keeps, keeps switching over to these time frames that just look like spaghetti noodles or spaghetti squash or some kind of just weird mash. We need to know what's happening in this moment. So let's just pretend we are right here in this move. As we are moving up, we need to know that this weekly level is approaching, because that is going to tell us the strength of the level and how strong the offset of that is going to be, and if it's first touch or first test and all these different things, right? And we need to know that we are in this wedge on the weekly level. So if we start to break out of this, like what we are doing here, right? If we are breaking out of this wedge, this is probably going to be a pretty big move down, right? I would expect Monero. Well, I wouldn't expect anything yet, because if I swap over to the daily, we're not actually broken out of it yet. We've just wicked out, just like we did here. We've just kind of wicked out of it. So until I've seen, until I've seen the weekly close outside of it, I wouldn't expect anything yet. But I know that I am starting to test a break outside of this. And if it was, say, Sunday afternoon at 3 p.m., and we talked about this time in the week a little bit on the last lesson. If it was Sunday at 3 p.m. in the afternoon, and I know the weekly is closing soon, this is something I need to know. You understand that if it's on a Tuesday, this has less relevance than on a Sunday, because maybe if it's Sunday at 3 p.m., in 4 hours and one more 4-hour candle, I know we are going to be opening up a new weekly outside of this. So very important to know. So that's why we leave the higher time frames on. The higher time frames are left on because we need to know what's going on in the move. And when we're coming up to this monthly level here, we need to know as we're charting it. But the lower stuff doesn't matter on the higher end, right? And I hope that makes sense. So now we are going to apply the same concept with wedges. So we are going to have different wedges, and I don't know, let's just pick a spot here. The same thing happens with wedges. So this is the low that started the move up here. We have a high there, and we have kind of this wedge here, right? So we have kind of the same thing that we've talked about in the past, an evolving wedge pattern that starts here and moves there. So as we go further into this wedge, we'll talk a little bit about, just to kind of brush up and refine more on the why wedges work and how they do. Right, we know right now that we are in a larger wedge. This purple one that's all over the screen here, we know that's a larger valley, or wedge, whichever one you want to call it, a larger valley that's created over the course of how many weeks ever we identified it earlier. So we can see that the top side, and this is all acting as support and resistance, and as we break out of this wedge, right, we can see that we move up. Okay, now in the moment this would have been important, because we would have been right here. We would have been right here. Right, we would have identified at this point here and this point here, right? We would have identified that's the wedge, and we would have basically just lined it up with the bottom side of this, right? At that point in time, right? So we would have needed to see where this is going to go. Okay. Ah, darn it. Let's go back. Whoopsies. Okay. Wrong button. Okay, so we would have identified this wedge, and we would have kind of lined it up with the bottom side of this trend, and we already have it lined up with the top side of this trend. So we would have kind of needed to see where this is going to go now. Hopefully, 15-minute chart. See, kind of goes down, and it breaks the bottom side of this. Wedge, so naturally it moves down. So at this point we would have then adjusted it out to here, right? We would have then adjusted it like this. We've got the top side of this wedge and the bottom side of this wedge, and on a 15-minute chart. Now let's step forward a little bit, and it breaks out of the top side of that wedge, right? Breaks out of the top side and creates a new pattern for us, right? Okay, so right there we would have seen that kind of a thing like this. From there to there was that wedge there, and we know this is a swing low here, right? So we would have just dragged this out here, right? This top here to that top there, this bottom here to this bottom here, and we would have had this evolving wedge. Right, you can see it respects it the whole way, and it looks like it's losing this wedge here. It's coming back in, and it breaks down out of the wedge. So now it would have evolved again, and we could keep going with this wedge. We'll just, what we're going to do is we're just going to swing this out to here, right? So now this would have been like this: swing, 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 high, swing, 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 low. Let's see what happens. This is going to be the last one I do, because I don't want to keep doing this, right? As it breaks out of this wedge, it starts to move up. Now, okay, is this relevant on the monthly and the let's get out of the replayer. Yes. Is this relevant on a weekly chart? Let's take a look. What does this tell us on a weekly chart? Oh, I already have it turned off. Let's go back to it and see. Set this back to default. Why is this off? Let's set this one as apply defaults, right? And let's turn it yellow. I think it was because I was playing with this is from my main profile, And let's turn the opacity down on this so we can actually see what's going on. And then we are going to go back again, and we are going to change the outline color to the thick yellow color, and we are going to turn that down because that's a little too bright. So yellow, and just a tiny little border, just very subtle. Okay, so now let's switch over to our monthly. We might not see it because I think it's hidden by a candle. Let's switch over to our weekly. Like, what does that tell us? It shows us literally nothing. Like, this is just useless congestion on the chart. It doesn't show you anything, right? It just shows you just blah. Like, I don't know how else to say it. Let's go to the daily. Is it more blah on the daily? Probably, right? Yeah, like, what is that showing us? Nothing. It's just like a fancy design. Well, it's not even. It's definitely not fancy. That's not a fancy design. It's just a shape on the screen. Just a random shape that has no relevance whatsoever. On a 4-hour chart, does this have any relevance at all? Not really. Very, very little. What could you have like, what could you really have seen based on this that you wouldn't have seen somewhere else? Like, this is not, right? What could it show you on the hourly? Let's take a look. On the hourly, it is showing you more information, right? It is showing you more information on the hourly. So this is another example of something where we are going to go into it, and we are going to double click it, right, to set the parameters. And we are going to turn off the days, weeks, months, and we are going to go template. We have 1 hour to 24. No, we don't want 24. We're just going to go 3 max. We are going to go template, save as 15 min wedge, right? So now we have a 15-minute wedge identified. We have 15-minute trend lines. You know, as we switch to the 4-hour, those are gone, right? No more congestion. Voila, boom, we've got a beautiful chart now. We can now snap through these quickly. We can switch to see what's going on a 15-minute, to the hourly, to the 4-hour, to the daily, to the weekly, to the monthly, and we have great clarity, and we are able to see these charts now with a better understanding of what's actually happening in perspective to what chart we are on. If we were on a monthly, we don't want to see that daily stuff. It makes no difference. It has no relevance, like you've seen, right? So that's part of that idea of segregation of time frames as well, right? So there's a few different layers of that segregation. There is the support and resistance, which is monthly and weekly is your top bracket, and then daily down is your second sector, your second bracket, right? Which we went over. There is then the patterns and trends and daily levels. So then daily levels end up being reflected to everything back, right? And weekly levels get reflected everything above, okay? So we have that idea of daily down. Now going to the exact opposite end, we have 15 minutes, right? 15-minute is only good to 15-minute to an hour, right? This is more of a short-term trade, right? You're going to use this for, you know, retracement trades or different trades that fall within, you know, a 6-hour time frame, or maybe even a daily time frame, right? And then we have the 4-hour. So let's go over this real quick. Okay, so 4-hour. What are we going to color our 4-hour wedge? Let's just do green, but like a spring green. That'll be kind of cool. So 4-hour. What do we have here? We have this here by the looks of it. Oh, okay, so let's actually mark this out properly. Let me zoom in so I can actually see what's going on here and not just kind of eyeball it. We have the top of the move that started the downtrend, right? So that's right there to here. And I just colored the border differently. Let's color the whole thing differently. Ooh, that doesn't work very well at all. A little darker maybe? Yeah, okay, that works. So we have the move that started it down. We have this here to that swing low there. We then have, so we have swing low here. We're going to drag that out. And then we have high to this high here, right? High. It would have first started here like this, right? So high right there to the swing low to this swing high, and it would have broken out before it moved down, and looks like it gained, you know, it found support off this level and moved back into this wedge and broke up. So at that point it would have been like this, right? This swing low here, right? And that swing high there, and it moved up. So as this goes, we are just going to keep evolving this out. Okay, so now we are at this swing low here, which ends up being the same trend here. So if you drew a trend line, you would have actually had you know, the trend line from here to here, this point to this point, acting as support and resistance the whole way through, right? I drew it kind of, I don't have my magnet tool on, so everything's getting a little misaligned here. Come on. There we go, something like that, okay? So I'm just gonna delete that for now anyways to show you, you know, where that line would have come in. And we can now see that we have a different time frame wedge that's important for us to know, right? So now we are working within this 4-hour wedge, and let's take a look at that. Of course, we already know the answer to this on the monthly. It's not going to be relevant. You're not even going to see it because it's, you know, hidden in here. What about the weekly? Again, you're not even going to see it. It's hidden in there. Daily. Oh, maybe it's turned off actually. I could have this turned off from my template too. Okay. This is what's going on with this one. We have this as a 15-minute wedge. Okay, so this one we are going to save as, and we want this to show on the 1 hour to 4 hour and the 1 day as well. Just 1 day. We are going to save this one as 4-hour wedge. So anytime we have a 4-hour wedge we're creating, we can come and use this like this, right? And we can go ahead and just quickly click that template and apply it. It's just a matter of double clicking it, going here. I have a 15-minute wedge and I have a 4-hour wedge. So now I'm just going to go 4-hour wedge. Okay, bang. So let's now go back and take a look at this. You won't even see it on the weekly. On the daily, it's actually relevant on the daily, and that's why I ticked it off on the daily, because this is where on the daily you are going to see the relevance of this, and you kind of have a wedge within a wedge here, one wedge kind of breaking out of a wedge, you know. But let's think about that for a second. We have a 4-hour wedge breaking a weekly wedge. A 4-hour wedge is not breaking a weekly wedge. It's just showing us what's happening in the move, because the weekly might not be over, right? This is not over yet. This is still within the confines of our valley, so it's actually not over yet. Okay, so let's go back to the 4-hour. We've identified this on a 4-hour, and we can see that it is important on this 4-hour chart. Okay, now let's go to the 1 hour. What do we have on our 1-hour chart? We got to rewind this, not rewind it, but I guess expand it back a bit. Do a little bit of magic here. So now we can see we have, right, we have our larger 4-hour wedge that's living inside our weekly wedge. So you have a 4-hour wedge, a weekly wedge, and then we have some of these levels here. Now let's expand this further. Yeah, okay, there we go. We're going to expand this further. And we can see we have this 15-minute wedge that's showing us maybe a 15-minute move that's relevant to our hourly, right? And this would have continued to expand out, right? And this would have, you know, ended up being like that. And then, you know, this would have ended up being something like that until it ends up actually being, you know, another wedge within a wedge, right? So it would have ended up being something like that. And as that broke this 15-minute trend, right? So we're looking at the 15-minute wedge, and we're just kind of quickly, well, okay, let's leave that where it was because we already identified the bottom. And let's do this properly. Let's line up this swing low to this swing low here, right? We're gonna do this properly. We're not gonna just shotgun this like I'm trying to do it. Okay, so swing low on the 15-minute swing high comes down. This would have been the first swing low, right? It would have done something. Let's turn that magnet tool off. That's super frustrating, right? It would have done something like this. It lost it. It came down, created a new swing low, right? We already know that's the swing high, and this swing high is actually living within this 4-hour swing high. So now you can see both are pretty big levels there. So now we have this 15-minute down right here, right? It comes up, creates a downtrend, comes out of this downtrend here, moves sideways back up into this. Let's continuously move this out, right? And at this point, this wedge would have been almost obsolete, right? This is getting too big, right? It's a 15-minute wedge that's not. This is more of trend lines that's happening now. So we lose this 15-minute wedge right here. Right, you can see that as we break some of these levels here. So let's walk through this a little bit, and this is why this is important. Okay, you've got this bounce off the bottom of the wedge here. You come up, test a level, reject once you start moving sideways, because we created this uptrend like that. We created this uptrend, this trend line up. Once you move sideways, you are losing that trend line, that 15-minute trend line. You are losing that trend line and moving down, right? That is now resistance. So you've lost that trend line. And this in itself, now, okay. Silly green marks on my screen. Now let's do something else here. What does this look like? This looks like another valley, right? So you can see how trend lines create valleys within valleys, and time frame is important. So this is another valley. As we reject off of this right here, off of this level, as we reject and we break that valley, well, what happens when we break a valley? We're going to move down, right? We're losing that, and we now have resistance here, and we have resistance on this trend line or this valley line. So we move down outside of our 15-minute wedge, right? This was our 15-minute wedge. You see that? And look what we do. We test our 4-hour wedge, right? We take this bleed down and we start moving sideways to test the 4-hour wedge. So now, right, as we get rid of a few of these, it's getting pretty ridiculous. As we now bounce off this, we know we need to break this, and this is going to act as resistance on the 15-minute chart. So you can see how having these different time frames of clarity make a great impact to the way you trade, and they are going to give you a certain amount of reactions and speed and clarity, because like I said, this stuff, it's not relevant, right? It's not relevant on a daily chart. This, I don't need to know this. Like, this is not, oops. All that stuff that happens in that 4-hour chart on the 15-minute, I don't need to know that, right? I need to know this on a 1-day chart, and that's it. Like this one right here, what was this one? This was like a 15-minute wedge, and I never set this one. This is the one I didn't set, right? When I just kind of quickly created this wedge. So let's double click this, and we would have created this based on a 15-minute wedge. Let's create that 15-minute wedge there, and you know, now it's gone. We don't need to know that wedge is there. So you guys can see how as you're flicking through these levels now, we've started to build out and create almost this army of wedges and trends, and we can see exactly what's going on in these moves, right? And you can see that if I'm looking at my weekly chart, I don't need to see any of that other stuff. It's not important. And it keeps your mind clear, and it keeps your eye on the prize, and it keeps you able to adapt quickly and make decisions, because when you're charting, the last thing you want to do is spend 8 hours on every chart. You want to really pin down and nail your charts, right? Do them properly, pin them down and nail them, put templates on them, start adjusting time frames so you can move through these things quickly. That way, if you're getting into a scalp trade, you already know what's going on, right? You already know, oh, look, right here, there's a perfect spot for a short, right? Look at this, we're rejecting this level. Rejecting this level, perfect spot for a short. We're going to break out of this wedge, which is going to break the next 15-minute wedge. We create this trend here. We know that we're going to get caught somewhere on the 4-hour, because a 15-minute's not going to break a 4-hour, or at least it's going to bounce once, it's going to bounce again, and then maybe it'll, you know, hit here and then bounce back up. It'll touch this daily level, and then it'll come up and maybe test this to try to come back in it. Maybe it won't, and it'll come and it'll settle down here. But by having this stuff templated out, you can see that the opportunity for a swing trade here was fantastic, because you can see right here, this level is being rejected, and we are being forced out of a 15-minute wedge. And when we lose this 15-minute wedge, we're going down. We then create trend, and voila, so is the story. So you can see how, well, to start, why we couldn't go over all of this in one video, which was the last video, because it becomes quite elaborate, and level adaptation and how to move through levels a little differently, a more evolved version. Adapting time frames in a few different ways, adapting time frames based on the way we indicate daily levels, right? And based on time frames, the way we indicate, daily levels of support and resistance, and time framing levels, right? Going back to this thing right here, which is time framing levels. So that's a pretty big piece of what level adaptation is, and how and your guys' first taste of how to adapt your levels, and the process that we will take these theories of what we are learning, and we will start to implement them into levels. This has been a long video full of context. You guys are probably going to have to watch it a few times. This was a doozy. The assessment of time framing is kind of what we went over in the end. Wowzers, that was a good lesson. The most important one by far in the beginner's course. We are coming close to the end of this beginner's course, and this was by far the most important one because it gave you guys an insight as to putting all of these theories together to kind of create a chart and build out your first professional level chart where you can see what's going on, and you can now at this point should be able to take all the things we learned in the first 8 lessons and put them all together into this idea of adaptation of levels, right? Remember, levels are not just support and resistance, well, not just swing lows and high levels, right? Support and resistance levels, but also wedges, patterns, valleys, trends, levels abroad, right? And how you guys can now see volume and momentum offsetting against certain levels with the idea of trends and kind of taking all of these and now putting them into one final kind of melting pot of amazingness. So what is level adaptation? We went through that just now. Level segregation, again, the 2 sectors that levels live in either box A or box B based on, box A or box, there we go, box B. So I have to look at my camera my screen to see where my hands are, make sure they're not off screen. So the different ways that these live in different sectors, time framing levels, and how different time frames and making these templates kind of play into the overall scheme of things, and how you can do that on your own, and the assessment of time framing and what it means, and the theory behind it, and how it affects our charts in total. So this has been a great lesson. It ties together a lot of the things we talked about. Again, if you guys haven't liked and subscribed to the channel, go ahead, like the channel, subscribe to the channel. If you want to support what I do and donate, feel free to do so. The details are in the video description, and check out Twitter and TradingView. I post everything up there, including content release scheduling and some of my day-to-day trades positions I take. You guys can follow along, get in on the same positions or not, or just play from the sidelines, whatever you decide to do. Okay, guys, this has been a great lesson, and we'll see you on the next one. Take care.